And in such a setup, we've had a muted listing coming in on Popular Vehicles as well. So, it's basically a muted listing, not because the offer, but because the market sentiment right now. It's listed at a flat, it's listed flat at 289 rupees per share. The issue price was close to around 295 rupees per share. With the last time we spoke with the management, they did say that going forward, they will see increased revenue coming in from services, and that would imply increased profits coming in from the services business as well. And Naveen Philip, who is the CEO at Popular, joins us now. Thanks a lot, Naveen, for joining in. The last time you did say that services will increase to beyond 25% of sales versus 15% now, and growth will come in from non-South markets as well. We asked you for a promise to give us more detailed numbers the time you list. Tell us now, what kind of growth are you gunning for in terms of revenue in FY25, FY26? How much of that will be from the services? Numbers would be appreciated.
First, thanks to all the investors who have instilled confidence in us, and welcome to Popular Vehicles and Services. As we mentioned, Nigel and Mangalam, that in the past also we've been clocking at revenue growth in terms of services at a CAGR of 25%, and we hope to maintain that in future. And in terms of revenue growth, overall has also been a healthy figure as such. The first half figures were out, and we have published that as such. So we have done a 40 crore PAT against an overall last year PAT of 63 crores. We're hoping that the growth and the momentum will be there in the market per se.
Okay. All right. Hi, Naveen. Good morning and good to see you. Ben, Nigel on this side. Well, as you told us, I think the last time around you have, around 15%, I think, coming in from the services business. And that has improved from around 11% earlier. So tell us, in FY25, FY26, how do you scale this number up? You told us, I think it was going to be around 25%. So tell us, year-wise, how does it move up? And also, there was scope for margin improvement out there, because I think services margins had improved from 13 to 19%. Further scope out there?
So true. As I said, in terms of the momentum that we have created over the last 3-4 years, in terms of both the top line. So services last year contributed approximately 15% of the top line and about 55% of EBITDA. And this was about 11% and closer to 37-38% of EBITDA in the previous, about 3-4 years back. So that sort of momentum and the initiatives that we have put in, we hope to continue further.
All right. What about the non-South markets? Now, South markets are penetrated. If you could give us a sense of your growth plans in terms of reach, outlet, and revenues coming in from the southern markets going forward and the non-South markets as well.
So as we said, if you look at about 5-6 years back, 75 to 80% or 85 to 90% of our revenues were from Kerala and Tamil Nadu put together. Today, that's come down to less than 70%. And going forward this year, I'm saying the numbers will go down further with our Maharashtra opening out both in the Vidarbha and the Marathwada region in Feb 23. So our focus is to grow in all large and emerging markets. We're looking at NCR, Gujarat, Maharashtra, and penetrating those markets in a much bigger way. We're always on the lookout for opportunities, and as we get them, we'll keep you updated on those opportunities also.
Got it. Okay, so some diversification of geography as well as something that you've been looking at. Tell us, for the company on the whole, you have another listed peer, but obviously they are sending only high-end products, high-end cars. And that's why their margins are relatively better. I think in last year, your blended margin was around 4.8%. Since your services segment is going to contribute more, where do you see this number headed in the coming years?
Now, we've been seeing a growth. So this blended margin about 4-5 years ago was 3.6%. We have moved it up to 4.8%, which is a 50% increase over the last 2-3 years. So that is what our focus is on. In terms of, if you look at our half-yearly results and the listed peer results, FY24, first half, we have clocked a 40 crore PAT as against their 27 crore PAT. So I'm saying in terms of growth, in terms of profitability, in terms of return on equity and net worth, we are right now far ahead.
All right.
And that's because of our services contribution.
What about some more acquisitions? You said you are open to opportunities, like you acquired the Bharat Benz dealership in Feb. what other geographies are you looking at? What could the amount earmarked for these acquisitions be? I just wanted to know how you think about these acquisitions.
No, yeah. So even in the past, I think starting from 2015 or even earlier, we've been able to acquire dealerships at a pace of at least 1 or 2 large dealerships through the years and across brands. So we have acquired in Maruti, we've acquired in Tata Motors, and all brands that we've acquired, and across geographies, both Karnataka, Maharashtra, etc. So that pace will keep ahead. There's no decrease in pace, and we're looking at opportunities. We can't put a ticket size to it because if we have had ticket sizes of 1 crore, we have had ticket sizes of 11 crores, 13 crores. So we have had various ticket sizes. So we can't put a number to it per se, but the focus will be on acquisitions, yes.
Well, this financial year as well, you've made an acquisition. You said you're going at a run rate of 1 to 2 dealers per year. We have numbers till FY23. FY24, have you made anything yet?
No, we have not yet made any acquisitions. During the IPO period, we have not done, but conversations are on, yeah.
And so this year we can hear something.
Hopefully.
What about pre-owned as a percentage of your total mix? Where is that number headed?
So we did about 10,000 cars pre-owned last year, 11,000 odd cars, as against a total car sale of approximately 48,000 odd. So it's about 20 to 25% of that. We're hoping to increase that as the number of choices in the market increase and the people's exchange rate increases. So last year we were at an exchange rate of new car to used cars, we were around 32%. But if you're taking it about 4 or 5 years back, that was about 26%. So as new car penetration increases, the exchange rate also increases. We're hoping to grow that number at a decent CAGR.
Can you define decent?
I think the new car market is growing at around 6 to 8%. The used car market would grow at probably about 2 to 3% over and above that. So it'll be about 10%. We're hoping to beat those market growth rates.
All right, Naveen, thank you so much for joining in. Once again, congratulations on listing. It's a momentous occasion for your company. We will hope that growth continues going forward, growth coming in from services, growth coming in from pre-owned, growth coming in from non-South geographies, and perhaps an acquisition that we'll hear for soon as well. Wish you good luck.